This weekend, Netflix has been all over the news with some controversy around their platform as they have hosted one of the largest boxing events in history. And that is none other than the Mike Tyson versus Jake Paul fight. So in today's video, we're going to touch on this fight as well as some future events on Netflix and what they could ultimately mean for Netflix's strategy going forward. So as always, if you enjoy these videos, make sure to drop a like down below and subscribe for more content like this. Let's start by discussing some of the numbers around this fight because they are absolutely crazy. Netflix said that they had a record 60 million households tune in worldwide. Of that, they peaked at 65 million concurrent streams, and gate receipts for this fight surpassed $18 million in revenue, which is the largest for any fight outside of Nevada. On top of that, the co-main event, which was a fight between Katie Taylor and Amanda Serrano, peaked at 50 million households watching, which is the most watched professional women's sporting event in US history. And the event itself almost sold out the Dallas Cowboys Stadium, which seats 80,000 people. The event recorded around 72,300 people in attendance. For me personally, I am not a fight person. It's not my go-to thing to watch, but it's interesting to tune into these events and get an idea of the scale of what exactly we're talking about and the impact that it will have for Netflix, because this is something that is massive. It got a lot of people onto their platform and using their platform. The only downside was the amount of buffering that took place during this event. A lot of people complained about how much the stream was buffering and not really being able to watch the actual events because of all the stoppages that were occurring. And this is likely something that Netflix is going to need to figure out, and they are going to need to figure out very quickly, because they are set to stream NFL games on Christmas Day, not only this year, but for the next 3 years. Earlier this year, Netflix signed a deal with the NFL to stream at least one of their Christmas Day games. They're planning to pay around $75 million per game, and right now Netflix is actually planning to stream 2 games this year on Christmas Day, with at least one matchup in 2025 and one matchup in 2026. And this is clearly somewhat of a shift for Netflix, as their CEO came out a couple of years ago and said that they weren't even really looking to get into live streaming events. He specifically is quoted saying, "We have not seen a profit path for renting big sports. We are not anti-sports, we're just pro-profit." But it's clear from the numbers that these live events capture a lot of attention. We can see that in the numbers around this recent fight, as well as in the Christmas Day games in the NFL from last year, which averaged 28.68 million viewers. At the end of the day, Netflix just needs to find a way to monetize this viewership better, and it's clear that other companies have been able to do this. One of the most notable being Amazon, who signed a media rights deal with the NFL in 2021 for around $1 billion per year to have exclusive rights to the Thursday night football game. And overall, Netflix needs to look at their strategy and see where they ultimately want to be positioned, because a lot of these other streaming services, whether it's Amazon, Apple TV, YouTube TV, are all looking at live events as their next potential growth vector. Whether it's the NFL or even the NBA, they're looking to get into these different units within the market to potentially branch out and become more competitive in the streaming space. And Netflix has lagged a little bit behind in terms of live events that they're now just starting to get into. And ultimately, in the short term, this could have an impact on their earnings. Netflix has been a company in the last couple of years that has focused a lot more on being profitable, and that has shown through in their numbers. If they shift their strategy to more live events, that may cause a short-term hit to their numbers. They reported their most recent earnings on October 17th. They came through with EPS numbers of $5.40, which beat analyst expectations by over 5%, and they posted a revenue of $9.82 billion, again beating expectations slightly by around 0.5%. This revenue represents a year-over-year growth of about 15%. Overall, they also called out as one of the first bullet points in their report these 2 events. They called out the Jake Paul-Mike Tyson fight, as well as 2 NFL games being streamed on Christmas Day, and how this could help accelerate their business into the future. And overall, this quarter was excellent for Netflix. Again, their revenue grew by 15% year over year. They posted operating margins of almost 30%, as well as year over year membership growth of 14.4% and record free cash flow of $2.194 billion. And Netflix is a company that really doesn't show any signs of slowing down. 5 years ago, at the end of 2019, they had a trailing 12-month revenue of around $20.1 billion. They have almost doubled that in the past 5 years to around $37.6 billion. And this top-line growth hasn't come at the expense of bottom-line growth. At the end of 2019, they were bringing in a trailing 12-month EPS of $4.13. Since then, they have over 4x that number to $17.69 of trailing 12-month EPS. Those are GAAP numbers. In terms of non-GAAP numbers, the current year EPS estimates come in at $19.76. That is up from a year ago when they put up $12.03. And next year, analysts have them growing even further. Another $4 of EPS is expected, driving them up to $23.73. And these consistent and solid top line and bottom line growth numbers have resulted in stock price gains as well. In the last month alone, Netflix is up almost 20%. Year to date, this stock is up over 75%. And in the last 5 years, it has gone up over 175%. And even despite these massive gains, the stock is still at a relatively fair valuation compared to the rest of the market. Its forward PE ratio is currently sitting at a 34.36 with a trailing PE ratio of 46.58. For comparison, this is only slightly above the NASDAQ 100 index, which currently is trading at a forward PE ratio of 31.27. So for me personally, I don't own any shares of Netflix. I did look at the stock back in 2022 when it fell dramatically down below $200. It was a price that was very interesting to me, but I never ended up pulling the trigger, and ever since then, the stock has gone on an absolute rampage as they have focused a lot more on growing their bottom line, and that has paid dividends for Netflix. I think that the next thing up for them is to see how they can monetize some of these live events and help them perform better and compete better against companies like Amazon that are trying to break more into the streaming industry. And I certainly think that Netflix can and will be able to do that over the next couple of years. But remember, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, why did the turkey refuse to eat dinner? Check the comments down below for the answer. Thanks for watching.